Here on this Wednesday, it's a short week. We had the holiday on Monday, but today is a big day. We got a big show lined up for you. You don't want to miss it. I'm going to give you out our 800 number, 800-951-0592, the physical delivery of what we like to call wealth insurance. Gold and silver is what we do. AmericanGold.com is the website. We're going to play an interview that was done. Matter of fact, if you go out to our website, allamericangold.com, go to yesterday, and you'll see the interview with Greg Marinero. We're not going to play the whole thing. So if you want to listen to all of it, you can do that. But talking about the banks, talking about the risk, talking about something isn't adding up in the treasury markets, as we've been telling you. On top of that, the big thing is, how safe are things going to really be? Today, the yield curve uninverted. So we've just finished the longest yield curve inversion in history of the United States. As we've educated all of you out there, the previous longest inverted yield curve, let's see, the 87 crash, right? The financial crisis crash, the Great Depression, right? These are the signs, we boom and bust cycles. This is it. The yield curve is uninverted. Normally when that happens, right, in the next 90 to 120 days, we enter into recession. We'll see how it works out. Atlanta Governor Bostic out today. We cannot wait for inflation to come back down. We need to start cutting rates. Gold is higher. Obviously, Wall Street's higher because that's all they want to hear. But Jason, today we're going to be focusing in on, and it's because we've been talking to people, you better be careful with where your money's at. The banks, your money market accounts, your stock accounts, just remember, they've tightened all the rules to who's going to be forced to pay what when things come crashing back down. And we're going to have this interview. It's going to take up most of the show, but it's going to be highly educational for people out there listening about what to expect and some surprises as Greg, Jason, he mentioned names. He's already talking about, hey, Lehman Brothers and Bear Stearns, they were the fall guys last time. There's going to be a new fall guy this time around, and he's naming names.
It'll be a good listen for sure.
Yeah, so why don't we go ahead, let's start with it, and we're going to get the first 3 minutes here of the interview. And listen, it's going to be a wide range of stuff. We'll stop it here and there, kind of dumb it down if we need to, but let's listen to what Greg has to say.
Debt market is always right. This is an old adage going back as far as you want to go on Wall Street. Okay, the debt market is going to tell people what they need to do. The debt market right now, it's obviously it's the biggest bubble in the history of the world. It's being fueled even more. It's going to end in absolute disaster. But realizing when I watched the market falling off of a cliff those 2 days here, two things happened. One is I looked at what the U.S. 10-year yield was doing. Why the U.S. 10-year yield? It's the benchmark. It was doing nothing. It was actually coming down, and then I watched the dollar fall off the cliff. Said, this is a buying opportunity. This is a buying opportunity. So I told all my Lions, everyone that follows my work, what I was doing. I don't suggest anyone does anything. I tell them what I'm doing, and if they feel like following me, that's fine. Okay, if not, that's fine too. Everyone told me I was going to be, so many people, Greg, you're wrong, blah, 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 this is the top. It's nowhere near the top, because we got, again, massive currency devaluation coming at us, artificial interest rates, massively hyper-ballooning global debt, central banks destroying their currency by design, and central banks are betting against their own system. I want people to think about that right now. How many people really understand this and probably know what I'm about to say? And do your own research on this, people. 25% of the world's gold is hidden in vaults under Wall Street. That's a fact. Number two, why are central banks collectively right now at a 5-year high with regard to their gold acquisition? They're betting against the same system they're forcing us to participate in. Another reason why you need to hold commodities. That was nothing here. I mean, it's melting down. The yen carry trade is over. The market's going. It's a joke. What they do is they want to hype people up. They want to create fear. They want to paralyze people. You want to make people freeze up. You make them afraid of something. You want to control their minds. You make them afraid of something. There's no fear here. It's too simple. Understanding the dynamics that are in play really makes it easy for everyone who has even one functioning brain cell, maybe two, to understand what they need to do. And that's pretty much what I'm all about, is providing solutions to people by raising their awareness as to what's happening to them, period.
So he was talking about the 2 days he was talking about, that was the Friday and the Monday where, remember, the Japanese yen fell apart, the stock market was down 12%, and even our markets here were down. But he was like, hey, it was a buying opportunity, because, you know what, here's what I'm looking at. And oh, by the way, their central banks are actually betting against themselves, and you better get ready. We're going to pick this up. Joe and Jason here on this Wednesday. The Dow's up 130. The S&P's up 11. The Nasdaq's up 45. Tough day yesterday, right? The Dow down over 600. The Nasdaq down over 500. The 10-year note 379. So we got back up to 39, down to 379. Job openings tumbling well below expectations today. And then, of course, the Atlantic Fed Governor Bostic saying, hey, we're going to lower rates. We can't wait. Gold and silver, both higher as well. The need to get diversified, it's vital here. And when you get done listening with Greg, you'll see what we're talking about here. Make sure, if you got $50,000 or more, check out our friends at Y-Refi. Great fixed rates of return, up to 10.25%, not correlated to Wall Street. That's probably the biggest thing here. Wait till you hear what he has to say about what he thinks Wall Street's going to do. And fixed rate means what? It doesn't change. Well, what if this and what if that? No, it doesn't matter. You got to check them out here. Get more diversified. Invest. YRefi.com. That's the word invest, the letter Y. REFY.com. Or just call them. 888-YREFI-24. So, as you can tell, this guy's a trader. Listen, this is how he makes his money. And Jason, he was setting up what was happening with Japan and the yen. Then he talked about debt, global debt markets, a lot of the stuff we talk about. And then talking about, listen, this is how idiotic it is. The central banks are essentially betting against their own system while telling all of us we need to be in the system. And of course, he's talking about all the gold buying that's been going on. But as he gets into it here, he's going to update. He's going to tell you where he thinks Wall Street's going to end up, where gold's going to end up. He's also going to tell you who he thinks, what bank is going to be the fall guy for the next crash. Let's pick it back up, Jason.
That yen carry trade real quick, Joe. Does he mention that later in this video? Do you know?
He may mention it again as well, but that was, we cut off that first 8.5 minutes of that interview. A lot of it was on that.
Okay, and does he mention that it's going to happen again? Because
I think he did. Yes, that once,
maybe 2 or 3 more times the yen carry trade may happen.
Times, yes.
Yeah, okay, got it. Okay, here we go.
Okay, wait a second. I just thought of another question. You think the gold's hidden? I've heard this, that the gold's really hidden under Wall Street. Mm-hmm. You don't think it's in Fort Knox?
No, I don't know what's in Fort Knox, but I know this. I know that the Wall Street institutions, the investment banks, look, the richest people in the world are hoarding gold. And I still believe that silver is the most undervalued asset on the planet Earth. And I don't just pull this out of a hat. I look at the Dow gold ratio. I look at the gold silver ratio. And I try to discern where the bottom is. I just did a whole video about this. I just wrote a whole paper about how this should play out here. Where's the bottom in this market? We don't know. But I would say it's somewhere around the Dow. I'm looking at a Dow potential of hitting 8,000 when we melt down. And I believe we're going to get a 1-to-1 ratio gold to the Dow ratio. And that means, and in an extreme situation, we can get a 10-to-1 with regards to silver gold. So, that's just on it.
All right, let's just stop it there, because that's a pretty bold statement, right? Hey, the Dow could go back to 8,000. You heard him say, hey, there's going to be a 1-to-1 with gold in the Dow, whether that's 8,000, 10,000, 20,000, I don't know. And then a 10-to-1 gold to silver ratio at some point. And remember, when silver got to $50 in the 80s, it got all the way to 16-to-1. Of course, silver, industrial-wise, a lot of uses. And I'll say this: I don't know about how extreme, right? Because that's pretty extreme. That's really extreme. But I think what he's really telling you is you better get ready for much lower stock prices, much higher gold and silver prices. Where it ends up exactly, well, it remains to be seen, right, Jason?
I don't think 8,000. I think he's put a little. And I watch this guy Greg once in a while when I'm watching on gold and silver in the markets. The only reason I say I don't think it goes down to 8 is because just inflation since the last time it crashed in the 08 crash. What did it get down to, Joe? 15,000?
66. I think it was 66.
16? Got down to
6,600.
Oh, did it get all the way down to 6,600?
Yep.
Well, I guess there's a small chance. I think the best it could do is test those lows. I forgot it got down that low.
Got to 60. I got to remember now, it only came from 14, 15 to 66. Going from 40 to 8, that's big.
Just with inflation, the companies that are actually behind these stocks, I can't see it because of inflation. It doesn't mean the stock market is worth a certain amount. It just means that because of inflated values, I don't see 8,000. But yeah, I see what he's saying. What he's saying is a huge downturn, which I agree with. 8,000 is being really bold. That's all.
Yep. Let's continue on
this. All right, don't take anything I say. If it hits you the wrong way, do your own research. If what I say is hitting you the right way, and I think most people who follow our work get it. People know when they're being lied to or when they're being misled. Just it's too simple. Honestly, if you just realize what is going on here. We know who our enemy is, we know who our enemies are, and we know what they want out of us. They want control, they want to extort our freedoms and liberties out of us. This is not just an issue here in the United States, it's a worldwide phenomenon going on here. And it's central banks who run the entire show. Why is it? Does anybody find it surprising that central banks have their bases in every continent on the earth here? They're destroying us by design. It's the one world government we've been told about. This is not science fiction. They control it all. Everything else is just a show. And that's it. It's we got to focus on this, and we have to decide what we want. People are looking for so-called this leader or so-called that leader to lead them into some promised land. Ain't happening. Okay, people consistently have their faith in the wrong place. And unfortunately, it ends badly.
Gregory, you mentioned the mom and pop shops and how they're disappearing. And we often hear how they just want to kill the middle class, get rid of the middle class. Explain to us why that is. How do they benefit by not having a middle class? They want the tax money.
Well, what they're trying to do here, look, I believe we're moving into a whole entire new system. This system that we're in must be deconstructed. It must be deconstructed, and this has been going on for quite a while now. Part of that is creating dependency on the system. They are creating dependency on the current system that they themselves are betting against. What they don't want a three-tiered society anymore. What they're looking to build worldwide is a neo-feudal system. Extreme haves, extreme have-nots. They want a slave class down here that's going to work for nothing, or maybe actually be slaves yet again here. This three-tier society is a relatively new thing. It's only a couple hundred years old. Before that, people lived under the rulership of kings and queens. Today, we're supposed to be this nation here, the United States, specifically, tried to pull away from that feudal system being ruled underneath a king, but we're being pushed back. They don't want it. They don't want this right now. We, the people, unfortunately, of the world, have lost the ability, or maybe the understanding, that we are supposed to be able to govern ourselves. Instead, it's that whole thing has been swept away. People have no idea. They think that that some other person is going to have their best interest in mind. You got to be freaking kidding me! Ain't the truth? But that's what they're doing here. This is a move to. I can't even define what we're going into, but it's some type of a neo-feudal system. Extreme haves and extreme have-nots here, and that's another thing. That's another reason why I don't believe they're done. I think that central banks are in their final phase here. I really do. And that's where we're going to see an accelerated currency devaluation, and central banks right now instituting emergency monetary policy. Meanwhile, we're supposed to be doing great. Our economy is the envy of the world. You remember that out of the mouth of Biden recently?
Now our economy is literally the envy of the world.
What they're doing here is, again, leading us down that pathway, unfortunately. And that's what they're doing here. They really want to foster a new two-tier society. And I think we're getting there right now. Do you realize people don't have any idea that under the last three presidents here in the United States, we've seen the 1% and 2%ers, we've seen more billionaires and millionaires being created in the last 3 years than ever in history. How does that work? And while everyone else is suffering here, the system is designed right now and being pushed into a way to remodel it, to reshape it, to deconstruct, lead to a new one here, so the 1% and 2%ers own it all. They, and not just own it all again, are the ones that are benefiting from the system. Well, everyone else pays for it. It's always the middle class. The middle class has been sucked dry. They don't have much left. And people are being pushed to the lower rung. I told people this was going to happen years ago. And it's happening right now to a very accelerated degree. And I think it's going to get worse moving forward.
Gregory, speaking of those who own it all, Warren Buffett, Berkshire Hathaway, reaching $1 trillion market capitalization. It's the first non-tech company in the U.S. to score the coveted milestone. But more interesting on the Warren Buffett front, and I want to get your take on this, continuing to sell his holdings of Bank of America. 24.6 million shares.
Yeah, it's pretty awesome here. Bank of America has got problems, and I've been warning about this for years. I think literally for years, probably over the last two, where I said, if you look at the Wall Street banks, look, they got to set up a fall guy here. I believe this with all I got. They have the system. People need to have an entity to blame. What they're doing here, okay, obviously this deconstruction of the system, they need a scapegoat. It can't be that it's central banks that are bringing the world to their knees. You're not going to hear any presidential candidate talk about this. They can't point their finger at the Federal Reserve. It's a blame game. It's just the way it is. The Federal Reserve, these guys, they're on the side of angels. Okay, so they're helping us. They want to get us out of inflation, which they could have ended in a nanosecond if you want to talk about that. The real way they could have gotten rid of inflation, but it would never happen. But anyway, so with this whole thing with Bank of America, I believe that they're being set up as the fall guy for. There's going to be an event. They have to point to it, whether it's going to be another scamdemic. I believe something hideous they're going to spring, because last time the face diapers and all that stuff wasn't enough, didn't create enough fear. Imagine a disease process where there were marks on the body. I just poked myself in the eye. Where people would run to the doctor, in my opinion, and get that bioweapon pushed into themselves, and they because of fear. They make people afraid. People are going to run. That's what they want to do. They want to create control. Anyway, but besides that, so an event is going to occur, has to happen, whether it's going to be a disease process, multiple disease processes, maybe a war, expanding war. I have no idea, a combination of something. where they're going to point to as the system comes down, so they can say, hey, listen, we've got a solution for you. And of course, the central banks are going to be more than happy to say, hey, you know what? They already have a solution here. They're destroying their own system. They're betting against their own system by hoarding gold, central banks, but they want us to participate in it. They don't want you in gold. They don't want me in gold. No. They want you and me in the dollar or the euro or whatever central bank you're unfortunately forced to exist under at this particular time. But Bank of America, I think, is going to be the fall guy. They have to do this. They did it last time. They did the same thing during the meltdown of '08. It's a repeat performance. Right. Lehman Brothers, Bear Stearns here. Now it appears to me it's going to be Bank of America. So he has to do this now.
I'm going to hit the break, Joe, but Bank of America was started and owned by an Italian family.
Yeah,
it's not even an American family. And when an Italian banking family knows that their bank is going to go down, they won't be involved in Bank of America when it falls, Joe.
And of course, what Greg's alluding to, and we've been talking about the volume of selling that Warren Buffett has been doing with Bank of America, and essentially what Greg is alluding to is, hey, Buffett already knows. Buffett already knows he's got to get out, and he's got to be out well ahead of time so he can claim, right, well, I didn't know. Hey, I sold it last year. I sold it a year ago. I haven't owned it in a long time. Matter of fact, when I sold it, maybe you guys should have sold it, right? Hey, don't blame me. I didn't know anything what was afoot. We're going to be back. He's not done. We're going to talk more. We're listening to more with Greg about what he has to say about the fall guy. Patriot Radio News Hour. 800-951-0592. Joe and Jason, Patriot Radio News Hour on this Wednesday. I want to get back to Greg here. Just remember, if you want to listen to the whole thing, go to allamericangold.com. It was on yesterday's site. Just scroll through. You'll see the video there. You can watch all of it in its entirety. But we're going to play the last few minutes of this one, and then Jason and I will kind of recap it all after that. So let's pick it back up with Greg.
As to its peers, you'll see what I'm talking about here. This bank is underperforming. There's a reason for that. I think more people like Warren Buffett are going to be pulling their cash out of this institution. I say avoid it like the plague. Do what they do. These people like Warren Buffett, they have an insight that you and I don't. Let's be honest, right? You and I can sit here and speculate, and we can try to make sense of what's going on here. But this is what's happening. And it's just too clear to me. So, but the solutions are in our freaking face. We know what banks to avoid. First of all, people need to get their cash out of the smaller institutions. I've been telling people this since before it started. When the regional banks started having problems, I don't know, over a year ago, I was telling people, these institutions have a problem. No loans, no deposits, no deals. Now, the big institutions have the same issue, including Bank of America here. But the big institutions have the main line to the Federal Reserve. What they're doing here, as they deconstruct the system, is consolidate power in fewer and fewer hands. Should make sense to people what I'm saying. So what we're going to see, and this is being hidden from the public, the banking system, first of all, it operates in a perpetual vacuum. It's absolutely insolvent. The entire financial system operates in a black hole which can never be filled. Henceforth, why? Every mechanism that you could think about, dream about, or even have a nightmare over is going to be utilized to pull cash into the now from the future. The debt-based system is a curse upon the world, run by the central banks, and we're forced to participate in it. Meanwhile, they're betting against it, these central banks themselves. It's kind of interesting. But anyway, that's where we're going here. So be very leery of what you're seeing, understand. Open your mind. Why are these things happening? What we're going to see, there's no doubt in my mind at all, is these smaller banks, the smaller institutions are going to start to collapse as in a cascade. And what's going to happen here is the big institutions, just like they did, are going to swoop in and buy the good assets off the smaller institutions for pennies on the dollar. And you know who's going to get stuck with the garbage? You are. So am I. We the people are. It's what they did last time, and they're going to do it again. Why? Because it worked.
Wait, Gregory, I want to ask, going back to Bank of America, are you saying in terms of the big banks, you see them falling?
I think Bank of America is going to be the fall guy. I think that's the bank that more than likely, it could be another one too, but I mean, in combination. But I think Bank of America, from everything that I look at, and I talk to everybody, and I study this stuff, I think Bank of America is going to be set up as a fall guy. The fall guy. Look what we did, everyone. We allowed this institution to fail. And what will happen is, again, Bank of America's good assets will get bought out by the other banks, and the bad assets are going to be put on our backs.
Well, wait. Let me ask you this. Because if Bank of America, let's just put the scenario, is in on it or whatever, I mean, aren't they like, wait a second, why do we need to be the fall guy? I mean, are they not aware of the script?
Of course they're aware of the script, and they know where it's going.
But it benefits them, you're saying. But does it benefit them? Why would they allow it to happen?
It doesn't benefit that bank. Of course it doesn't. But the collective, it's all about the collective. It's not about a single institution.
Okay.
And that's why we're going to see the smaller institutions, and then they're going to allow, just like they did last time. They didn't have to do that. The Lehman Brothers event, the Bear Stearns event, what happened to the assets of Bear Stearns? What happened to the good assets? All of them. They got bought out by JP Morgan. All the good assets. Who got stuck with the bad stuff? We did. Same thing happened with Lehman Brothers. They're going to do this again too. They're going to say, look what we did, people. We allowed this institution to fail. Of course, they're being set up to fail here. But again, and then, but the public needs to assign blame, or have someone tell them who is responsible. Oh, look at all the bad stuff we found on their balance sheet. They're responsible. And of course, it's collective. What's going on here? Look, when you see something like Warren Buffett, what he's doing right now, and he's not the only one pulling their cash out of this. It's just, I've been talking about Bank of America for years. And now to find out what's going on here, just really brings it home to me that I've been on target with this. And look, I'm not telling people, I think people need to get their cash out of all these institutions. If they only keep in these institutions what you need. Because again, what's the bigger picture here? What's going to end up happening here is too simple. All we got to do is look back on history. What was really going on in 2008 when the market started to crash? 2009, was it really about the stock market, the Dow that went from 12,000 to 6,000? Was that really what it was all about? Absolutely not. Why was it that Ben Bernanke made his way over to Congress on, I think it was on a Saturday, and he went before our loving, caring representatives and told him specifically, he said, if we don't do this, push billions of dollars into the system to free up the credit markets, he said, we would not have an economy on Monday. What we were facing was we're in a liquidity crisis now, but the system was locking up. The system must be fueled with more debt, henceforth why we have a global economy contracting, the money ballooning, and the more that the currency loses purchasing power, the more they have to balloon the currency. It's a vicious cycle here. So again, it wasn't the stock market crash, it was the liquidity crisis. And that's what we're going to face moving forward. We're already in one. We can see what central banks are going to do. We're going to get a lockup of the system again, but this time they're going to say, okay, everyone, these are the people that are responsible. This is the event, but we have a solution. Because once the system locks up, what this means is transactions stop. You go to your bank, there's no cash in there to get out. You go to ATM, there's no cash in there. You can't swipe your debit card. You can't use your credit card. It's just gone. The system will lock up.
And the solution, central bank digital currency?
They're gonna offer, of course. They already have one. They already have this whole system. The system is already almost digital now. How many people actually use cash? Very, very few. All of us, me, I'll be honest with you, I carry very little cash on me. Most of the time, unfortunately, we all participate in the system. We're swiping. We want those benefits that they offer us by swiping from the credit card companies. We all want it. So we're actually asking for it in many ways. And what they're going to do is they're going to, of course, give us what we want. Just for an example, as giving us what we want, people were screaming from rooftops after the meltdown in 2008. Oh, my 401k, I lost all my money, I can never retire. So what did they do? They propped up the market. People were happy, weren't they? All those digits appeared back on their screen again after X amount of time here. People were loving it. You always get what we want. People get what we ask for because we have lost the ability to govern ourselves, okay? They take advantage of us. And then Then they try to package things up nicely and neatly and say, hey, this is what you want, right? Here you go. Of course we're moving to a central bank digital currency, a one world system, cross-border system here. And then they're going to track every freaking thing that we do.
Just like we've been telling you, when we get back, we got a great opportunity for you to get some of that money out of the bank. And we're going to talk about all the things that Greg brought up, because it was a lot. And who is going to be the fall guy? Does it matter? Picker Radio News Hour. We'll be back after. Joe and Jason here on this Wednesday. We were listening there. That was Greg Maninario. He is a well-followed Wall Streeter. If you want to listen to the entire interview, go back to yesterday's at allamericangold.com. Just scroll down through the articles and the videos that we put up there, and you can see it all. And again, today, just like yesterday, got $2,500 gold. Matter of fact, TV gold 25.25. Goldman Sachs yesterday, gold's going to be $2,700 by the beginning of the year. Right? Okay, they're just catching up. $20 gold pieces at $2,625. That's $100 difference between the December gold contract and a $20 gold piece. I mean, that's insanity, right? That's just super, super low premium. Take advantage of that. If you want to do the tens, two tens, $26.25. That puts your tens at $1,312.50 at 800-951-0592. And I know somebody think, oh my God, well, I'm in Bank of America. I need to go run and close my accounts and do it. I'm going to tell you what we tell everybody. It doesn't matter what bank you're in. What matters is how much money you got in there. That's what matters. The least amount possible is where you want to be in all of this. Because believe me, if Bank of America does, if they are the fall guy, right, and let's just say they are, and I don't know that they are, but he says that they are, and he's been warning about Bank of America for a while. It really doesn't matter. Because the whole system is going to lock up. And it's different this time. The last time the system locked up, remember, he said, oh, Ben Bernanke went to Congress and Wall Street won't open on Monday and blah, 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 blah. Remember, they got a new plan now. They got a new plan. Wall Street will open on Monday. And we're just going to eviscerate all the people that have left large amounts of money in their bank accounts, in their money market accounts. I mean, Wall Street, that'll be easy, right? Obviously, your IRAs, your 401ks, right? They get massacred. Now, that happens, right? We've seen that happen. But that money in that bank account, it doesn't need to happen. If you've got an IRA, you can roll some of that into a precious metals IRA. You can go to YREFI. You've got things that you can do. But this excess money in these bank accounts, this is the thing that people don't get, Jason. They truly are walking into this with no idea, because what people don't understand, you're the people, the people with large amounts of money in their bank accounts week after week, month after month, year after year. You are the enemy of the central bank. You're the enemy. Why do they want to have low interest rates? Well, because they want you to spend your money, right? Go out and buy something, right? Don't leave it in the bank. Invest in Wall Street. Don't leave it in the bank. And now they've set it up, Jason, for the money that's in the bank, we're going to vaporize.
That's right. And, one thing I guess I'm a little bit different than Greg is, and as you're talking about it locking up, it doesn't have to lock up in their system. It really doesn't have to lock up. What they're doing, which was just take the '08 crash, that didn't have to happen the way it went down. They could have let all those big banks that were drowning in all those bad MBSs, those mortgage-backed securities, all that stuff. They could have just let them drown and die. And if there was going to be a lockup of liquidity, well, we know what the Fed can do for that. The Fed doesn't have to give it to the big banks. They could have did what they did during COVID. Right, Joe? We could have had a lockup of currency worldwide during COVID. That could have happened. Nope, the Fed just flooded money all over the place and kept things swimming as they were dealing with the next economic emergency, which was going on and being built up before 2020. So what they did in 2008, you see that? I was watching the video, Joe. I'm sure you saw it before, but you see the big long table with all the Nancy Pelosi and all the so-called important people as they're being told, hey, by Monday we're going to lock up if we don't do this. Scared all those people at that table. It's like, all right, go for it. Save your big buddies, because they're the ones that get us elected anyways. And so everybody at the table was in agreement. Yeah, we're gonna save these big companies, and we'll figure out how that's gonna look. And this time, and then what Greg is completely right is, it'll be on our backs. All the good stuff will be sorted out. What is it? Two wolves and a sheep trying to figure out what's for dinner. That's what's gonna happen, right? They're gonna figure out who gets the good parts of the sheep, and then there's no sheep left to actually live on and prosper themselves. So, yeah, Joe, he's exactly right on all of it. As far as locking up, I don't think the system will lock up just because they have to have a system in place. So, I guess it will lock up if they're moving to the new system. Maybe the lockup happens, and then the digital currency comes flying into the rescue. So, but that's the only way that it'll lock up. That's the only way. They have to have
that's going to be the lockup. Just that. Hey, here's whose fault it is, right? And by the way, once we go digital, the system will unlock, right? And of course, at that point, the damage has already been done.
And let me guess, the Rothschilds will own 52% of the digital currency before it gets distributed, right?
Right, exactly right. 800-951-0592. Patriot Radio News Hour, $20 gold pieces, $26.25. Or, hey, 2 10s. $2,625. Either way, great value here today. Final segment coming up. 800-951-0592. Patriot Radio News Hour, final segment on this Wednesday. Is Bank of America going to be the fall guy? I don't know that it matters one way or the other. But again, it is the amount of money in your bank accounts, in your money market accounts. Understand what the bail-in rules are. And he kind of laid it out. And he was a little more dramatic. Hey, there's not going to be any money in the bank. You're not going to the bank and saying, hey, I want to withdraw my money. It's not going to happen. It's not. How do I know? How do you know, Joe? You don't know. Yeah, I do. Yeah, I do. They did it in Greece. They did it in Cyprus. This will be global. They'll do it everywhere. Got to keep it in there. Can you get money out of the ATM? Maybe get $20, $100, right? You're not going to be able to drain your bank account because that's just what the rules are. And then at some point in time, as we've talked about, there's let's go crazy. $125 billion max in the FDIC insurance fund. That's all there is. I mean, Bank of America alone's got, at least probably closer to $2 trillion in insured deposits. I mean, the math's pretty simple, right? And of course, he talks about all the little banks, the money market. Boy, did they fix that quickly, didn't they? I think that's what caught them off guard this time is a bunch of people, when we had that little hiccup in those regional banks, What did they decide to do? Well, you know what? I'll just go to the money market. Yeah, because somehow they still want to have faith in the banks, Jason, even though over and over, right, they've proven that they're not. But for a lot of people, they just can't get over it. And now, like the money market accounts, it may be the worst of the worst because they'll just say, well, it broke the buck. Now you just get less. You got less money.
Well, and the banks had that advertising. You walk into your branch, it's like, look, we can actually offer you interest. Or people are like, what? Interest? Throw my money in there. So, because how long has it been since it's basically been around zero? And then, those money markets weren't performing. So there was actually interest there. So people thought that it was great. And the TV was telling you that inflation was going to go away or not be so bad. And it's over. So, they advertise it, Joe.
That they certainly do. Don't be fooled here. Understand what this really is about. We have unbelievable amounts of debt. The Wall Street on parade today, allamericangold.com again today. Look at some of the leverage these hedge funds have with these big banks, trillions of dollars. And of course, remember, people have started warning the Fed about, hey, we've got a hedge fund problem in the Treasury market. You guys better look into this because margin calls come and all of a sudden there's going to be a big problem because they won't be able to meet the margin calls. And so, Jason, I think whenever they decide, when is it? I don't know. It is interesting that the yield curve uninverted for the first time this week, that we haven't seen that in several years now. And usually that's the signifying feature. Hey, very quickly, let's say between now and the end of the year, are things going to change dramatically? And we look at the jobs number, the JOLTS number today, a huge miss. A lot less jobs out there all of a sudden. Thanks for Radio News Hour. God bless everybody. Be your